Imagine this scenario. You live in a bustling city like London or maybe Manchester. The day you get paid feels great, but then reality hits. Your rent payment goes out immediately. Your energy bills seem to climb higher every month. And before you know it, you're looking at your bank account near the end of the month, and it's practically empty. Sound familiar? This isn't just a hypothetical situation. It's the real day-to-day struggle for so many people across the UK. Today, we're going to talk about how normal, everyday people, not me, actually manage to save money right here in the UK. We'll break down the practical steps, the common mistakes to avoid, and the mindset you need to build a secure financial future. So, stick around, because these tips are designed for real life. First things first, what do we even mean by financial saving? It's a simple concept, but one that often gets over. Saving just means putting a portion of your income aside for your future needs, whether that's for a rainy day, a big purchase, or just peace of mind. Let's take a realistic example. Imagine someone working in a supermarket in Birmingham. Let's say they earn about £1,600 a month after tax. It might not sound like a lot, but what if they commit to saving just £80 of that every single month? It's a small, manageable amount, but after 1 year of consistently putting that £80 aside, they'd have £960 saved up. That's nearly £1,000, enough to cover an unexpected car repair, a dental emergency, or a sudden flight home. This shows that saving isn't really about the size of your salary. You don't have to be a high earner to make a difference. The real magic is in consistency. It's about building the habit of paying yourself first, even if it's just a small amount, every single month without fail. That discipline is what builds wealth over time, not a huge paycheck. So, why is saving so critically important, especially here in the UK? The simple answer is that life here can be unpredictable, and things can change incredibly fast. We all saw a perfect example of this recently. When energy prices suddenly shot up, many families found their monthly bills were £200, sometimes even £300 higher than before. It was a massive financial shock that came out of nowhere. For the families who had some savings tucked away, it was a stressful period, but they could absorb the extra cost. They had a buffer. But for those living paycheck to paycheck with no savings, it was a crisis. They had no choice but to turn to high-interest credit cards or overdrafts, digging themselves into a hole of debt just to keep the lights on. This is what savings are for. They act as your personal financial shield, protecting you and your family from sudden shocks. Whether it's a rise in the cost of living, a boiler breakdown in the middle of winter, or losing your job, having that safety net means you can handle the crisis without spiraling into debt. It gives you options, control, and most importantly, resilience. Now, let's talk about the common pitfalls. So many people in the UK have good intentions to save, but they fall into a few common traps that sabotage their efforts. Let's see if any of these sound familiar to you. The first major mistake is keeping all your money, including your savings, in your everyday current account. When your savings are mixed in with your spending money, it's way too easy to dip into them. You tell yourself it's just for a small purchase, but it happens again and again, and your savings never actually grow. Another huge mistake is relying on your overdraft every single month. Many UK banks offer an arranged overdraft of, say, £500. It's easy to start thinking of this as part of your available balance, like it's your own money. But it's not. An overdraft is a loan, and the interest, even if it seems small, quietly builds up in the background. Using your overdraft month after month isn't a financial strategy. It's a sign that you're consistently spending more than you earn. An overdraft is not savings. Let us be very clear about that. It is hidden debt that quietly drains your finances over time. Another trap many fall into is only making the minimum payment on their credit cards. The credit card companies love this because it keeps you in debt for years, sometimes even decades, while they collect a huge amount of interest. If you have a £2,000 balance on a card with 20% interest and only pay the minimum, it could take you over 20 years to clear that debt, and you'd pay back far more than you originally borrowed. It's a cycle that's incredibly difficult to break, but perhaps the biggest mistake of all is having no emergency fund. This is the foundation of all financial security. Without it, any small crisis can turn into a major disaster. These mistakes are so common because they offer a short-term fix. The overdraft covers you until payday. The minimum payment feels manageable. But in the long run, they trap you in a cycle of debt and prevent you from ever getting ahead. Recognizing these habits is the very first step to breaking free and starting to build real wealth. Let's dive deeper into the single most important savings goal you should have: the emergency fund. This is non-negotiable for financial stability in the UK. Why? Because life is unpredictable. A job loss, a sudden illness that stops you from working, or a major home repair can happen to anyone at any time with no warning. An emergency fund is your personal safety net that allows you to handle these situations without panic and without going into debt. So, how much do you need? A good rule of thumb is to have at least 3 to 6 months worth of essential living expenses saved. What are essential expenses? This is your rent or mortgage, your utility bills, your council tax, food, and essential transportation costs. So, let's recap. The key takeaways. We've established that saving is not about how much you earn. It's about the habit of consistency. We've seen a savings buffer is your essential shield against the financial shocks that are a part of life in the UK. We've also identified the common traps to avoid, like living in your overdraft or only paying the minimum on your credit cards. And most importantly, we've broken down the goal of an emergency fund into a manageable, step-by-step process. Start small, be consistent, and keep that money separate. Building financial security is a marathon, not a sprint. Every small step you take in the right direction moves you closer to a future where you are in control, where you have options, and where a financial emergency is just an inconvenience, not a catastrophe. You have the power to change your financial story, starting today. I'd love to hear from you and build a community around this. What do you find is the hardest part about saving money in the UK? Is it the high cost of living, the temptation to spend, or something else entirely? Let me know your thoughts and your own tips in the comments below. Your experience could help someone else who is struggling. And if you found this video helpful, please give it a like. Subscribe for more practical financial advice, and share this with someone you know who needs to hear this message. Thanks for watching, and I'll see you in the next one.